Welcome to BitcoinvPodcast, your weekly check-in on the dynamic worlds of finance and cryptocurrency. It's Wednesday, May 28th, 2025, and we've got a lot to cover. Joining me today is our seasoned market analyst, Jamie. Welcome, Jamie.
Thanks for having me, Alex. It's certainly been an interesting period in the markets.
Absolutely. Let's dive straight into the U.S. stock market. It seems to be on a bit of a roller coaster ride lately, balancing strong past performance with new pressures. What's the big picture?
That's a good way to put it, Alex. The U.S. stock market on May 28, 2025, is indeed experiencing significant volatility. This is largely influenced by several macroeconomic factors, including U.S. Treasury yields climbing past the 5% mark, President Donald Trump's tariff policies, and ongoing anticipation regarding the Federal Reserve's interest rate decisions. After a really impressive 2024, where we saw major indices hit record highs, Dow Jones over 45,000, S&P 500 past 6,000, and NASDAQ at 20,000, the market entered 2025 facing some correction pressure.
But we saw a bit of a positive turn recently.
Yes, the trading session on May 27, 2025 showed some encouraging signs of recovery. The Dow Jones Industrial Average was trading around 45,000 points, up about 500 points or 1.1% on that day, bouncing back from sell-offs linked to tariff concerns. This index has climbed from around 41,250 points at the start of 2024, primarily driven by tech and energy stocks. The S&P 500 reached approximately 6,000 points, gaining 2.05% on May 27th. However, it's worth noting it was still down 2.05% over the first 5 sessions of 2025, which was its longest losing streak since April 2024. Large-cap tech stocks have been a key support for this index. The NASDAQ was trading around 20,000 points, with a strong surge of 2.47% on May 27th. This was largely led by tech giants like Tesla, which jumped 6.94%, along with Nvidia and Apple. In fact, the NASDAQ has risen nearly 11% since the beginning of 2025, fueled by the boom in artificial intelligence, AI, and tech companies.
What are the main factors investors should be watching that are influencing these movements?
Several key elements are at play. Treasury yields. The 10-year U.S. Treasury yield exceeding 5% is putting considerable pressure on growth stocks, especially in the tech sector. This has prompted some investors to shift funds towards safe haven assets like gold, Bitcoin, and defensive ETFs. Higher yields also increase borrowing costs, which can impact businesses relying on debt for expansion. Tariff policies. President Trump has somewhat softened his tough rhetoric on tariffs, particularly following the trade agreement with the UK announced on May 8, 2025. This helped the market recover from an earlier sell-off in April 2025 when concerns about a U.S.-China trade war escalated. However, investors remain cautious due to potential new tariffs on other trading partners like Canada and Mexico. Economic reports. Upcoming reports are critical. Nvidia's earnings expected by the end of May 2025, the Federal Reserve's meeting minutes, and OPEC Plus's decision on oil production will heavily influence market sentiment. We also saw data from an IPOS survey indicating a slight dip in U.S. consumer confidence, which negatively impacted retail and non-essential consumer sectors. Plus, the U.S. non-farm payrolls report, due in early June 2025, will offer more clues about economic health.
And how are different sectors performing within this environment?
Technology continues to be a leader. The Magnificent Seven, Apple, Microsoft, Google, Amazon, Meta, Tesla, and Nvidia, are still driving the market, with recent gains ranging from 9.68% to 22.69%. Tesla, in particular, stood out with a 6.94% gain in a single session, boosted by optimism around self-driving cars and renewable energy. Interestingly, short sellers have reported paper profits of $159 billion over the past 6 months, indicating significant divergence between sectors. Sectors like real estate and consumer goods have attracted capital due to expectations that the Fed will maintain stable interest rates in the short term, which supports mortgages and consumer spending. Energy stocks, such as ExxonMobil and Chevron, have seen a slight lift from rising oil prices due to supply concerns in the Middle East.
What's the short-term forecast for the U.S. stock market then?
In the short term, the U.S. stock market is likely to continue fluctuating. Key support and resistance levels to watch are DJIA between 44,000 and 45,000, S&P 500 between 5,800 and 6,000, and NASDAQ between 19,500 and 20,000. Key events include NVIDIA's earnings, the Fed's minutes for insights into the interest rate path for the second half of 2025, and OPEC Plus's oil production decision. Longer term, the upward trend is expected to continue, driven by technology and the Trump administration's expansionary fiscal policy. However, risks from rising inflation and global trade tensions could trigger short-term corrections.
Let's shift gears to Bitcoin. It's been on quite a journey, recently nearing its all-time high. What's the latest there?
Bitcoin was trading around $108,114 CoinDesk to $109,838 ZebPay on May 28, 2025, which is close to its historic peak of $112,000 recorded on May 22, 2025. While its price saw a slight dip of about 2% compared to the previous 24 hours, from $109,865.80, it's up 1% compared to last week, $106,659, indicating a stable growth trend. Bitcoin has shown a strong recovery from its low of $74,000 in early April 2025, surging 24% in just a few weeks, thanks to political support and institutional capital flows.
What are the key drivers for Bitcoin currently?
There are a few significant factors. Trump administration policies. The Trump administration has been promoting crypto-friendly policies. This includes announcements about establishing a strategic Bitcoin reserve fund and appointing Paul Atkins, a known crypto advocate, to the U.S. Securities and Exchange Commission. ETF inflows. U.S.-based Bitcoin ETFs recorded net inflows of $381.4 million on May 27, 2025, which is the highest since January 30, 2025. The total assets under management for Bitcoin ETFs have reached $110 billion, with major players like BlackRock and Fidelity leading the charge. These inflows help reduce price volatility and increase liquidity for Bitcoin.
What does the technical analysis tell us about Bitcoin's trajectory?
From a technical standpoint, Bitcoin is in an ascending channel. It has broken the $104,500 resistance level and is currently testing the $110,000 zone. Key support levels are at $98,000 and $93,350. The relative strength index is at 64.87, which is in the neutral zone, suggesting Bitcoin isn't overbought yet but warrants some caution. Both the 50-day simple moving average SMA at $96,493 and the 200-day SMA at $86,796 are trending upwards, confirming the medium and long-term bullish trend. There's a cup and handle pattern on the daily chart, which often suggests further price increases, but short-term selling pressure could push the price back to the $106,000 to $108,000 range if it fails to decisively break $110,000. Trading volume over 24 hours has been robust, ranging from $18.59 billion to $47.3 billion, a significant increase from the previous week, showing active investor participation. Bitcoin's market capitalization is around $2.14 to $2.18 trillion, accounting for 56.8% of the global crypto market share. Market sentiment has shifted to greed, with the Fear and Greed Index at 74, according to Changely. While many social media posts are bullish, there are some warnings, like from @MerlinTrader on X, about a potential double top pattern that could lead to a short-term correction.
So, what's the outlook for Bitcoin, both short and long term?
In the short term, Bitcoin could test the 120,000 mark in the second quarter of 2025 if it successfully overcomes the 110,000 resistance, supported by ongoing ETF inflows and friendly policies from the Trump administration. However, if selling pressure mounts, the price might correct to the 106,000 to 108,000 range, with crucial support at $98,000. Long-term forecasts for 2025 vary, generally ranging from 123,000 CoinCodex to 200,000 Bitwise Investing Haven. Some, like Cathie Wood and Michael Saylor, have even more optimistic long-term targets, like 2.4 million by 2030 and 13 million by 2045, respectively. The main risks remain macroeconomic volatility and unclear regulatory landscapes.
Moving on to the broader crypto market, Jamie, Bitcoin often leads the charge, but what about the rest of the ecosystem?
The total crypto market capitalization reached approximately $3.44 trillion on May 28, 2025, marking a 0.47% increase in 24 hours. This is more than double the $1.735 trillion market cap recorded in 2023. As you said, Bitcoin leads, followed by major players like Ethereum, Dogecoin, Solana, and various decentralized finance DeFi protocols. The crypto market is generally benefiting from Bitcoin's recovery, institutional capital inflows, and advancements in blockchain technology.
Any particular altcoins or trends standing out?
Yes, several are making waves. Ethereum, ETH, has surpassed $2,600, driven by ETF inflows and the growth of decentralized applications. There are forecasts for ETH to reach $5,500 by the end of 2025, thanks to network upgrades and DeFi expansion. Dogecoin saw a 12% jump on May 27, 2025, largely supported by posts on X from Elon Musk, who highlighted Dogecoin's potential in payments. Solana increased by 10%. Its proof-of-history mechanism, capable of processing 65,000 transactions per second, gives it an edge over Ethereum. Solana is attracting numerous NFT and DeFi projects. Stablecoins. USDC's market cap reached $200 billion, with projections to grow to $3 trillion within 5 years as it integrates into global payment platforms. Market trends. Meme coins are attracting a significant portion of new users, around 30%. Especially Dogecoin and Shiba Inu, though they remain highly volatile. For instance, Pi-coin dropped to $1.9 after a strong rally in 2024. DeFi and dApps are thriving, with Ethereum leading the way. The amount of Bitcoin locked in DeFi is expected to double by the end of 2025, thanks to protocols like Aave and Uniswap. Real-world asset RWA protocols like Sui, Zebic Network, and Plume are also gaining traction, attracting capital due to their practical applications in finance, real estate, and supply chains. Prediction markets like Polymarket, leveraging blockchain, demonstrated high accuracy in the 2024 U.S. elections and are expanding into sports, entertainment, and finance.
With all this growth, what are the key risks investors should be aware of in the crypto space?
Despite the optimism, there are significant risks. High volatility. Sudden price drops can occur due to sell-offs by whales, large investors who reportedly own about 92% of Bitcoin. Potential crypto winter. Both Coinbase and CryptoQuant have warned about the risk of another crypto winter if market sentiment sours or if the Fed tightens monetary policy. Legal and regulatory uncertainty. Although the Trump administration appears supportive of crypto, legal restrictions concerning the Fed's ability to hold Bitcoin and regulations around stablecoins still pose risks.
And what's the short-term forecast for the overall crypto market?
The crypto market could continue its growth trajectory thanks to friendly policies from the Trump administration, ETF inflows, and DeFi development. However, investors should keep a close eye on key support levels: Bitcoin around $98,000, Ethereum at $4,000, and Solana at $150. Altcoins like Dogecoin and Solana might benefit from Bitcoin's upward momentum, but the risk of correction remains high if the U.S. stock market or the U.S. dollar experience significant volatility.
Fantastic comprehensive overview, Jamie. To quickly summarize for our listeners, U.S. stocks showed a strong recovery in the May 27 session, especially NASDAQ and S&P 500, but they're still navigating pressures from bond yields and tariff talks. Tech, led by names like Tesla, is a key driver. Bitcoin is trading near its all-time high, around $108,000 to $109,000, buoyed by Trump's policies and ETF inflows, with the potential to test $120,000 in Q2 2025. And the broader crypto market, now valued at $3.44 trillion, is seeing strong growth from Ethereum, Dogecoin, and Solana, though risks of a crypto winter and regulatory issues persist.
That's a perfect summary, Alex. It's a dynamic environment, and staying informed is key.
Couldn't agree more. Jamie, thank you so much for sharing your invaluable insights with us today on Market Pulse.
My pleasure, Alex.
And that's all the time we have for today. Join us next week for another edition of Bitcoin Podcast. Until then, trade wisely.